Hello and welcome to Policy Watch, your packed snapshot of the week's biggest business stories, their context, their relevance and their impact. I'm Govindraj, Ethiraj. Finance Minister Arun Jaitley will present his first general budget on Friday and expectations are huge. The BJP government has taken charge at a time when the Indian and the world economy is passing through a difficult phase. The spectre of a weak monsoon and high crude prices following a crisis in the Gulf adds to Finance Minister Jaitley's problems. In pre-budget consultations held with all departments and sections of industry, most stakeholders urged the Finance Minister to follow the path of fiscal consolidation and take urgent steps to revive faltering economic growth. Industry bodies pressed for a simple and transparent tax regime with no room for retrospective taxation. Bankers and financial services sector demanded more steps to encourage savings. The state governments demanded a special stimulus package for themselves. The NGOs and the social sector demanded more allocation to the 2.68 crore disabled people of this country. Well, joining me now are DK Joshi, Chief Economist at CRISIL, and Shubhada Rao, Chief Economist at Yes Bank. Thank you both for joining us. We're trying to understand what's the key things that you were looking for and expecting from the budget. Shubhada, let's begin with your wish list.
The wish list is top 3 priorities that we would look for in the budget. One is a clear quality adjustment in fiscal deficit. So reining in fiscal deficit, fiscal consolidation, the first theme. Second, creating an enabling environment through policy framework to enable investments to take off. And third, very clearly, investments per se. So incentivizing investments, as we've been talking earlier as well.
So the second and the third linked?
Second and third are very clearly linked.
Okay.
But for that, when I said creating policy environment, through taxation issues, environment, mining, I think all of it needs to be taken in a holistic manner. So as to what were the key impediments that were identified for investment cycle to have stalled completely, and how to unshackle it. So I think second and third definitely get linked.
Right. So let me come back to each of them in a moment. DK Joshi, your 3 top
Well, I think this is the best possible mandate for taking hard decisions. So I would like to see not only reining in of fiscal deficit in this budget, but also a long-term framework, a new Fiscal Responsibility Act maybe. And I think the other aspect of that is we've been too focused on fiscal deficit. I think the focus should be more on cutting the revenue deficit, because that if you cut the revenue deficit, if you have target of cutting it down to 0, which was earlier, I think you are ensuring that you have enough investments from the government side also, because all your borrowings then go for investment.
Okay, so manage revenue deficit is one, rein in fiscal deficit of course is one. Is there a third point that you want to bring
Well,
in?
I think the third angle is there's been a lot of the economy cannot be revived through the budget, it's very clear. But I think if you keep the longer term perspective in mind, you can definitely switch expenditures. I think what's interesting is that over the last couple of years, the expenditures as a percentage of GDP have come down to their pre-crisis levels. They had gone up, but the revenue continues to fall. So I think in this situation, the best solution of the least painful solution is the GST, but probably it cannot be implemented. So I would like to see a direction as to when it is going to be implemented and what the government is going to.
So are both of you, and let me begin with Shubhada, are you expecting or would you like to see something directionally fundamentally different this time in the way the budget speech is delivered and the nuances and the larger points?
I would look for one clear difference here. One is, sounding very utopian and sounding very pragmatic. I think that's where the difference lies. Utopian, you can lay out the most longest possible wish list, but if it is not really backed by the credible action plan, like if I say that investments must grow, rural jobs must grow, but if I don't see any credible steps along the budget or the measures announced therein, it would just sound very, a wish list, a long-term wish list. So somewhere, while definitely, I think we had spoken earlier as well, both the speech of part A would be important and part B also would be important. Credible math and more importantly, as DK was also saying, a framework which, rather reflects its reform agenda and along with timelines. I think that's very important.
Right. So DK, from a larger thrust point of view, I mean, is there there something that you would want to see fundamentally different this time around, which is also reflecting the mandate and the people's will, as you mentioned earlier?
One aspect I think which I would like to see in the budget is transparency. I think it needs to be more transparent. I think these rollover and people having to calculate the numbers again and trying to challenge, I think you need to be very clear and about what's going to come in the budget. I think in the subsidies where I think it gets pushed over to the next year always. I think, for instance, about 25% of the subsidies have been rolled over.
Right.
So I think that's a pretty large number, and you have to put an end to that.
Okay.
And I think the transparency aspect is very, very critical from a credibility point of view.
Right. So Shubhada, you said rein in fiscal deficit is your primary point. Why is that? And what is the manifestation of that?
I think very clearly when we say rein in fiscal deficit, it also goes hand in hand with the quality of deficit. Time and again, we have been raising our subsidy spend and controlling and cutting back on plan expenditure. Now, reining in subsidy, we had a roadmap of bringing down subsidies to 1.9% of GDP. And what did we do? We actually went in reverse gear and saw the subsidies to GDP ratio go up to 2.3%. I think that's where we need to see fiscal consolidation coming in through quality adjustment. You cannot achieve fiscal deficit by cutting back on development expenditure, because then on paper I may show a 4.3, 4.5, but what has enabled it to be achieved is a cut back on a quality expenditure. So I think it's very important that fiscal consolidation has to have a meaning. Why fiscal consolidation is important? It frees up our scarce resources, to put it in very cliched economic terms. I think private sector needs to get in a big way in reviving investment and putting in funds. But if government becomes and remains the largest borrower in the market, I think it leaves little. It not just for the future, but even currently, if you look at the interest payments and subsidies as a ratio or as a percentage to revenue receipts, it's almost more than a third, 37% gone in these two items. Where does it leave expenditure to be allocated for development? So I think that's very important to watch out for. Credible math, realistic revenue targets. We cannot have an economy still struggling at 5.5 and tax revenue targets being projected to grow at 20%. You need to have them more in line with how is your nominal GDP growing. If it is growing at 12.5%.
So which also fits in with the transparency point.
Absolutely.
That
credible math is extremely important, and we have seen time and again pushing the can down the road kind of issue being witnessed in subsidies, and that's what we need to correct and arrest it, I would say, at this point in time.
You spoke about revenue, right? So we've addressed the fiscal part of it, the revenue deficit and the management of it. Why is that important, and what is the manifestation of that?
See, the moment you run a revenue deficit, what it means is that you're borrowing money for meeting a part of your revenue shortfall, which essentially means that you're using your borrowings for current expenditures. And currently, I think 60–70% of the borrowings are used for meeting current expenditures. Reducing the revenue deficit will automatically ensure that whatever you borrow goes into capital spending. Right. I think the moment you start targeting revenue, which was the framework of the earlier FRBM, which I think we were too focused on fiscal deficit right now. I think revenue deficit should also be. That will ensure that your subsidies are cut. That will ensure that you are able to switch. Basically, you need to switch expenditures from revenue to capital. Okay. And I think that you will not be able to do unless you cut the revenue deficit. I think that's.
So what could that one thing be which would surprise you, Shubhada, and then DK?
Surprise me on the positive would be that he actually sticks to his plan of cutting back subsidies, giving thrust to rural economy, jobs,
but you're also expecting negative.
Negative surprises. Expectations are running far too high, and we have seen that the finance minister has tried to anchor expectations to some extent, but anything that falls short of those very high expectations could mean a little bit of disappointment.
Right.
And that's where I feel that we should be prepared that it's after all a budget which has gotten made only in 3 weeks, unlike the previous all budget exercises which take 3 months. So I think we need to see budget as not just budget announcements, but also as something that will
set the path,
and
also a continuation of what has been done.
Absolutely.
DK?
Well, I think,
both?
I'm not sure when there could be many surprises, but I think one thing that I am expecting, but if I don't get it, I think then it will be a big negative surprise, would be lack of framework of how they're going to take the economy forward, because budget is all about fiscal, but I think beyond that, budgets are also used as an instrument for making clear what your policy objectives are and how you're going to meet them. And at this juncture, people are looking for a broad direction, and if it doesn't come out clearly in the budget speech, I think that will be a negative surprise for me.
Right, and we need to go in for a break, but we'll come back here with Policy Watch, and we're going to talk about populism when we return. Stay with us. Welcome back here with Policy Watch. Finance Minister Arun Jaitley says he will follow the path of fiscal consolidation and not indulge in mindless populism at the cost of the public exchequer. What does that mean? Well, I'm now joined once again by DK Joshi and Shubhada Rao. DK and Shubhada, let me begin with you. So how do you interpret this? When we say mindless populism, we obviously are referring to something that we've done in the past and which has had a certain impact on the exchequer. So how do you see it, and what can be done or undone?
Well, I think what it would mean is that if you are giving an employment guarantee scheme without taking into account what it is actually generating, I mean, if it is, because what happens is if you raise wages, I mean, that led to increase in wages, and without increasing productivity in the system, that is inflationary in nature. It's pretty well understood. So that would be under the category of rather reckless populism, I would say. So I think there's nothing wrong with this scheme. I mean, it is a good buffer scheme. I mean, it can provide buffer to a lot of people when the employment is not available. But if it is not linked to any productivity generation or creation of assets, then it can be inflationary, and I think that would be under the
in your opinion, would the Narega be the best or the worst example of mindless populism, the way the finance minister has used that term?
Well, I think Narega, without taking into account what it is doing to the economy in terms of asset creation, I think that would not be a healthy fiscal step. I mean.
Shubhada, are you in step with that?
I would think so, because you really need to have, it's not a dole. Our economy cannot afford a system which offers dole. So you really need to have productivity gains, you need to have asset creation if you're actually wanting to have a rural stimulus which can then become self-sustaining. So that is definitely something which would go under the label of mindless populism. The second I would think is petroleum prices, for instance. Yes, you need to protect the poor, but are we really? Diesel, for instance, is a classic example. It doesn't go to the targeted population. It's actually misused grossly, and subsidies go to the people who don't really need the subsidies. So I think we need to be more realistic in, particularly on the pricing of petroleum products. And at the end of the day, the economy has to bear the burden. If global crude oil prices are rising, we need to pay. Government can only pay a part of it, but not the major part of it. The burden has to be borne by the economy, by all the stakeholders. So I think that's where probably the finance.
So you're saying the Rural Employment Guarantee Act and subsidies on fuel are the two main manifestations of a relatively populist approach, right? So what can be done? I mean, so this is one part of it. So what's the other part of it? I mean, where we want to still make sure there is some support to those who need it, and yet create an economic stimulus?
Well, I think in terms of subsidies, the right sizing and targeting it better through improved delivery mechanism would at least somewhere contain the mindlessness of it. The second and more important, probably a take I can give, is one would want to see a populism which rekindles the animal spirit and brings in investment and risk appetite back into the economy, because that is the populism which is going to pave way for a sustainable growth. I think job creation is a must, is absolutely necessary, as early as yesterday. So I think it's extremely important to indulge and engage in populism of that kind, which actually paves way for government really stepping aside a little bit from the activities that it need not be into, and gives way for private sector initiative to really get accelerated.
DK?
Well, I think as far as if government wants to, I think obviously you have to
move away from an entitlement based system.
But I think you can choose activities which are employment generating and which have huge spillover effects, because not every penny you spend has the same impact on the economy. So if you choose, for instance, road building activity, I think that's one activity which will provide employment, which will also go to the poorest part of the country, which will also provide a buffer. I think we've seen it earlier that how, and there's enough need to build roads in the country. So that, I think, things which are structured around asset creation, I think those can serve both the objectives, which is job creation as well as asset creation.
So
for the
we are also saying that therefore we need more steps to actually shore up revenue which may not be tax based.
Absolutely.
Right?
Absolutely.
And where could they come from, DK?
Well, I think non-tax revenues, I think there are few options right now. I think, but they are very short-termish in nature. I mean, the long-term will have to be through things like GST, etc., which are efficiency enhancing. In the short run, you can focus on divestments and not wait till the year end to start the divestment process. Start it immediately. Markets are moving up, so this is the right time to dilute stake. And I think even you can. There's enough money to be made by diluting stake and not losing control. So I think you need to accelerate that process. But what is should be very clear is that that's a short-term measure. It will not be available to you every year. I think eventually growth has to go up, tax buoyancy has to go up, compliance has to improve, and I think GST is one of the best ways of doing it.
So if we are saying that there has to be some austerity in and therefore leading to a reduction in populism, does the government itself need to demonstrate that in some way, and where could that happen?
Well, I think they have been trying to do it in indicatively by cutting the foreign visits and so on. But I think beyond that, I think, as I said, the expenditures have already been reduced quite a bit. I think the productive part of the expenditure and subsidies are high. We know that within the expenditure. So expenditure reduction on the whole is not advisable nor is feasible. Expenditure switching might happen, and that requires all the hard decisions, which means wherever you've identified that this money is not giving you bang for the buck, or the subsidies are ill-directed, you try reducing them and then move it to the capital side of the budget. This is going to be a long drawn process. Subsidies are very huge in LPG, in kerosene. It's going to take several years, even if you start with a gradual increase.
And we've already begun. I mean, to be fair, in diesel, for instance, it's been a steady reduction in subsidies.
The other recoveries are not that humongous today as they were even a year ago. So, gradually, if we are getting towards alignment, I think the under recoveries and therefore the need for very high subsidies may not really be that huge. But I think another thing where government has already begun the process of cutting back its own is by consolidating ministries. I think minimum government, maximum governance is first way of, why do we need those 70 or 80 ministries, consolidate them on a rational basis and have a kind of
a So you're saying government itself is demonstrating, it's already talking about a reduction in populism, and there are some clear steps on how to do it. We need to take another break here, but we'll come back and we'll talk about bank consolidation and the health of banks to spur a stronger economy. Stay with us. Welcome back. Here with Policy Watch. Consolidation of public sector banks is expected to return to the government's agenda. The Finance Minister Arun Jaitley is expected to outline his intentions while presenting the budget. Finance Ministry officials have discussed the issue with some public sector banks and assessed their preparedness for merger and consolidation. The government has informed public sector banks that they cannot expect the government to bail them out in case of financial difficulties. The government is also looking at ways to reduce its financial burden by reducing its stake in public sector banks. Now, some public sector banks have shown their willingness for consolidation, but the move is expected to be resisted by small banks and trade unions, as there may be work culture related issues while merging the employee base of different banks. Well, still with me, Shubhada Rao of Yes Bank and DK Joshi, Chief Economist at CRISIL. So, one is the challenge of bank consolidation, and I'll get a general sense from both of you on that. The other is the health of the banking sector as a precursor to reviving economic growth. Shubhada, what's your sense? How much of these, to what extent do you see a linkage between these two, and what lies ahead?
Sure. I think, Govind, it's chicken and egg, because at the end of the day, what economy goes through gets reflected in the bank's health. And because of which, if bank balance sheets are reflecting the stress and strain, they are unable to grow when economy is turning around, at least for an interim period. So clearly, this is what has happened, particularly in the space of public sector banks, where the asset quality concerns have remained fairly significant in the last few quarters, particularly. That is purely because of the policy log jams and the projects really getting stuck and therefore showing as deteriorated assets. So that has clearly pinged on the balance sheets of banks. Capital infusion has therefore become necessary. But given government's limited capacity to infuse capital into the public sector banks, there comes the question, you know,
right.
what comes first?
Yeah.
So in this backdrop, you know, and also the Basel III requirements, I think it makes sense to have M&A activity in the public sector banking space, particularly because it would serve two purposes. One, in a consolidated manner, you have a better hold on the capital requirements, and two, more importantly, I think, is the skill sets. We all know that a large pool of you know, human resources will be retiring from the public sector space, and you know, the vacuum will be there in terms of skill shortages. If you have a greater degree of consolidation among public sector banks, I think that part of the lacunae would be in a way, you know, bridged, because skills are going to be seriously in shortage if it's so many people retiring.
Right.
So I think it makes sense to you know, create enablers for public sector banks to get into a consolidation mode.
Right. Okay. DK, so what about, you've done a study on this as well, right? The extent to which banks have to be ready to bear the sort of burden of economic growth.
Well, I think, as I said earlier, the financial sector is lubrication for the economy. I think the machinery doesn't work smoothly if the finances are not available.
Yeah.
It's very clear. And currently, with the impaired balance sheets, the banks are not in a position to do that. I think maybe they can finance 6% growth with this kind of bad asset situation that they have. But going beyond that will definitely require much cleaner balance sheets so that they can take risk, they can go ahead. Right now, I think
is it just cleaner or larger, or both?
Both. I mean, both. I think larger would mean the sense that I think you're talking of consolidation. What consolidation does is it, to some extent, will reduce the systemic risks because you'll have a big consolidated balance sheet, and it will also maybe there'll be more synergies possibly. I think that will have to be seen.
So you're saying, but cleaner balance sheet is more important.
I think cleaner is more important.
You have to get rid of NPAs.
And partly, I think it's cyclical, and or rather largely it is cyclical because you are in a downturn, and I think the sectors that are suffering most, infrastructure, etc., have very high debt equity ratios, and they are getting reflected in the bad assets of the banks also. So a mix of, I think, capital infusion, also I think asset sales. We have to be more transparent with asset sales. If an asset is sold, it is sold. I mean, it should not be moving around. I mean, so I think if you do these kind of things, then you prepare your economy for a healthy lift. I mean, this is what exactly happened in 2003-04. The bank balance sheets were already clean. Banks were willing to take risk. They moved into
and that was a key precondition for the growth that happened after that, apart from the external sector, which of course was good and favorable.
Yeah, and I think if the system is deleveraging, you cannot push growth up. I mean, so you need a healthy banks to healthy bank balance sheets to support growth and also take it higher. I think, and bank is a major source of finance in India, by the way. So I think.
And number for what is the kind of capital that's required to, let's say, clean up and re-gear the balance sheets, and whether that looks like it's in sight?
Well, I think the number, if you want to have the Basel III requirements, also number is quite large. I mean, and it will require, I think, capital infusion. It doesn't look like, I mean, how it will happen. So it's a pretty large number. I don't remember it exactly.
And that's something, therefore, the budget should also should be talking about, or could be alluding to as
well, yeah, I think so these big things, I mean, should get reflected, as I was saying earlier. I mean, some big, what is it that we should see over the next 3 to 4 years, and how you're going to deal with it. I think that should be made clear.
I think public sector banks can also look at current equity market conditions being where they are. This is a good window for the dilution aspect to take over now in terms of offloading and getting into a public issue mode. So it has to be a combination, because capital infusion is a must. How do they go about it is, consolidation could be one route, but tapping equity markets in the current environment also would be equally, a good step to take in.
I mean, and plus there's in any case talk of disinvestments and share sales, and therefore this could be tied to that.
This could be tied to that as well.
Aggressive disinvestment, I mean, not just disinvestment.
Yeah, disinvestment is at the moment a low-hanging fruit, because in this budget and maybe the next budget, tax revenues will take a while to get back to buoyancy. So the heavy lifting will need to be done by disinvestment. And earlier, to the point of what DK was saying, in terms of disinvestment, we haven't really seen a credible thought process on disinvestment. It's always remained a need-based, tapping. Whenever government falls short of revenue, there's a accelerated effort towards diluting. Sometimes, the largest undertaking like an LIC has to take over. So I think there needs to be a credible thought process in terms of why not look at disinvestment as a medium term, because if the government says that we need to be in business where we need to be and not in other businesses, this is the opportunity for the government then to actively look.
And this government did have a disinvestment ministry in its
precisely. So I think it can be converted into a very well thought out program of dilution across sectors of some of the government entities,
and which fulfills various requirements, including that of banks needing capital.
And some of the good that the previous government wanted to do was tie up the disinvestment funds to development activities, plan and whatever. So I think this is what needs to be built further on, Modi government has made that government needs to be in key areas, but private initiative is equally important. So I think it ties up well with the ideology of
what the government has been saying. DK?
Yeah, I think I agree. I mean, it should not be seen as an instrument of fixing the fiscal deficit. I mean, I think it has much broader connotations and much beyond the fiscal. And I think it should actually not be treated as something to fix the fiscal hole. I mean, I think you need to, if you are diluting the stake, there should be a larger gain coming out of it, not fixing the mismatch of revenue.
Right. So let's bring back a disinvestment strategy, and let's create a medium-term disinvestment strategy, so it achieves many more objectives than just filling up some
funding requirements
gaps.
Are huge.
Right. Well, thank you both for joining us. That's all we have time for on Policy Watch this week. We'll be back next week, same time. Thanks for watching.